Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 9th of March 2025. And we're providing our regular weekly update for the week ending the 7th of March. Gold and silver rose last week, primarily because of the significant fall in the value of the US dollar. However, this week we have important inflation data, which could also make a sizable impact. So, let's take a look. Gold rose $54 last week, rising from $2,859 to $2,913, having hit a high of $2,935 and a low of $2,858, a rise of 1.9%. Gold spread between high and low was $77. Last week we predicted gold would trade between $2,775 and $2,950, which it did comfortably. In sterling terms, though, gold fell £23, closing at £2,259. And in euros, it fell €63, closing the week at €2,692. Silver rose $1.34, rising from $31.24 to $32.58, having hit a high of $32.87 and a low of $31.16, a rise of 4.3%. Difference between its high and low was $1.61. Last week we predicted silver would trade between $30.25 and $33, which again it did comfortably. In sterling terms, silver was up 36 pence on the week at £25.23, and in euros it closed at 30.11 euros. That's down just 0.02 of a euro. The gold to silver ratio fell just over 2 points, from 91.5 to 1 to 89.4 to 1. Bitcoin currently standing at $83,500 and is fluctuating widely, and that's down $1,500 on the week. Equities were lower though. US equities did rise, however, on Friday, but not enough to make up for losses. The Dow Jones closed down 1,039 points at 42,801. The S&P 500 closed down 184 points at 5,770. And the Nasdaq Composite closed down 651 points at 18,196. The FTSE Index, that's the UK index, down 130 points at 8,679. This past month has not been a good picture. Oils were lower. Brent crude down $2.45 at $70.36, and WTI crude down $2.72 at $67.04. There was a period this week when both oils were below the $70 mark. The dollar index closed down a considerable 3.78 points, nearly 4 points on the week, and closed at 103.83. Now, last week's US economic data announcements revealed that manufacturing PMIs were broadly in line with expectations. One was slightly higher and one was slightly lower. ADP employment report for February reported 77,000 new jobs, compared with expectations of 148,000, and that compares with the actual figures of 186,000 reported in January. US trade deficit increased from $98 billion to $131 billion last month. Not good news for the Trump administration. With Friday's employment report for February showing 151,000 new jobs, up from January but lower than the 170,000 expected. The unemployment rate did rise, though, from 4% to 4.1%, thereby suggesting that the economy is not overheating and that there could be room for interest rate cuts later in the year. Now, Federal Reserve Chairman Jerome Powell expressed a cautious mood. He said on Friday that the US economy is, quote, fine, and the central bank has the luxury of holding interest rates steady to see if uncertainty over the outlook dissipate. He quotes, the costs of being cautious are very low, the economy is fine, it doesn't need us to do anything, really, unquote. Read into that what you will. Bill Adams, the chief economist for Comerica Bank states the position quite nicely in a note to clients. This is what he said, quote, "The Federal Reserve is in a pickle. On the one hand, slower job growth and rising unemployment are arguments for a rate cut. On the other hand, inflation, pressures like tariffs and immigration restrictions are arguments against an easing move." End quote. Now, this coming week, all eyes will be on Tuesday, when we have the CPI inflation data. The year-over-year rate is expected to fall from 3 to 2.9%, and the core rate year-over-year to hold steady at 3. Let's see if this happens. And on Thursday, we have the Producer Price Index, which is also expected to fall by 0.1%, and these are the main figures likely to affect markets. The reality is, however, that markets are more focused on what's coming out of the White House, with President Trump having temporarily rolled back the tariffs on Canada and Mexico, but has just aired the possibility of a 250% increase in tariffs on Canadian dairy produce and lumber in the future. This uncertainty has rattled equity markets, causing a 3 to 7% fall, depending on the index, over the past month. Gold's near-term outlook hinges on upcoming inflation data and Fed policy signals. A softer CPI reading could reinforce expectations for rate cuts, boosting gold prices. Conversely, stronger inflation could push Treasury yields higher, weighing on non-yielding assets like gold. Silver's short-term direction will largely depend on inflation trends, interest rate expectations, and global economic conditions. Like gold, its near-term future will be dependent on the likelihood of interest rate cuts appearing by June, and if we see stubborn inflation on Tuesday, this could potentially hit silver and reverse its recent rise. If the inflation data is good, however, we could see silver rise another $1 to $2 this coming week. So what are our predictions? Well, we forecast this week for gold to trade between $2,850 and $2,970, with $2,825 and $2,990 as outliers. We don't think it'll hit that 3,000 mark, even if inflation is good. Silver we expect to trade between $31.25 and $33.75, with $31 and $34 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you give this video a thumbs up, subscribe to our channel, press the bell sign so you're notified of our videos as and when they're published. Pop on over to our sister channel, make sure you subscribe there. And all that remains is for you to have a prosperous week ahead, but don't expect too much from equity markets for the moment, while this uncertainty continues.